Hey, what's going on, guys? I'm back to make some quick videos for you guys to help you understand today's topic, which is the ultimate price action trading strategy. Have you guys ever sit down and think about, hey, if there was no indicators like the moving averages, the RSI, the stochastics, the Bollinger Bands, the Kelter channels, and so on, if there was no indicators like these, how will I actually trade just using price, right? Because I mean, at the end of the day, as long as you make the things simple, it's easy for you to understand and easy for you to execute and trade around it. So let's talk a few things about it. A few things that you must know is about support and resistance, um, the previous supports, turns resistance, the dynamic support and resistance, and trending and retracement movement. So let's see what's going on. So what is support and resistance? Support is really a specific region where the buyers are willing to buy, right? So it's not a specific price point, it's more a specific region. In terms of resistance, is a specific region where sellers are willing to sell, right? So think about it. If you go and drop a ball, if you drop a ball on the floor is a support, right? So every time the ball comes down to the floor, it's going to hit the floor and it's going to go bounce back up. So that's support. The resistance is actually the air, how high it's going to go. So because there is resistance in the air, that's the reason why the ball is going to bounce for a few minutes, for a few seconds, and then it would eventually not bounce. So that's resistance, right? So the lesser the momentum is of the ball, the more resistance exerts on it. That's why it stops bouncing. So that's how you look at support and resistance. Now the dynamic support and resistance, um, which is most of the individuals look at it. So let's talk about it. Moving averages. Moving averages is an average of last X days of price. What I really mean is that if you pull out a 10-day moving averages, is the price of the last 10 days. If you look at the moving averages of, if you're looking at a 200-day moving averages, is an average price of the last 200 days. So that's kind of easy to understand in terms of looking at the dynamic support and resistance. Now, one of the common misconception really between traders is the specific moving averages work for all stocks, which is not the case, right? I mean, certain moving averages maybe follow the 10-day moving averages, certain might follow the 20-day moving averages. So you always have to evaluate and look at a stock in a vacuum and see which kind of moving averages it actually respects. Different moving averages are different, so you have to put it in a vacuum. Now, major trend, minor trend. Now, markets either move in trends or it might move in a consolidation manner, right? So if there is a major trend, then make sure that then you will be 100% sure the fact that there's going to be minor trends. So if the stock do go up, there is going to be chances are after a few days of up movement, there is going to be a small pullback in the market, right? Because people are not going to just buy and hold. They do have to sell stuff to go and buy other stuff. Um, in terms of the four stages of the market, there's accumulation phase, there's the advancing phase, the distribution, and the declining. Let me explain. Accumulation phase is when buyers are starting to buy the stock, right? There's not a lot of price movement, but you see a lot of spikes in the volume in terms of accumulation. Advancing stage is when the stock is actually moving up, right? Or is it moving down? That's the advancing stage when the stock there's actually a movement in the stock. The distribution phase is when individuals or the fund managers are actually going to start selling the stock. So you won't see a big decline in stock. However, you'll see on days where there's heavy volume distribution. And declining is, of course, when even bigger money managers comes in and start pushing the stock. Now, let's take a look at a few things about support and resistance, right? So here we are looking at an Apple stock. If we just take a look at it, we want to take a look at, where is the support and where is the resistance. So we talk about a regular support and resistance, and we talk about a dynamic support and resistance, right? So if you look at this stock out of Apple, the stock went up. So this is the first major trend, and then of course there's this minor pullback. So this is a spot which is becomes the so this region is a major trend, and this is a minor trend, right? Now, in terms of support, here is your support, right? Now, support turns resistance, or resistance turns support. So eventually, there's a price of about $135, if you see over here. At $135, it was finding a bit hard to go up because it had a 3-day consolidation, which means there is some seller sitting on here. So there is some resistance over here. Now when the price actually comes back to 135, see, this resistance actually became a support, right? Because this is where the people who were selling are now probably thinking, hey, you know what? This is actually going to go up. So now they actually go and buy it. Now the resistance becomes support, and hence you get the up move. Now look at this $140 level. Again, once it hits this $140 level, it takes a while for it to actually do anything, right? But once you see that this resistance has now become support, so every time it came down to 140, there is a push to 145. When it came back to 140 again, you have another push up, right? So you have a dynamic support and resistance. Let's look at another chart. Let's say Amazon, right? So we can take a clear look at this $850 region. We're not looking at specific price, we're looking at specific price point region. So at this point region, you will actually see that, you know what, there is a bit of resistance, because whenever the price tries to hit this $850 level, it always goes up and comes back down, it goes back up, goes back down. Now look at it. Once it crosses this region, it actually comes and retests this actual region, and then it makes its up move. Same thing with around this $900 region, right? You see that a bunch of times it goes up, comes back down, try to breaks it again, comes back down, try to breaks it again, comes back down, and then when it finally breaks, it actually breaks. Let's look at one more chart, right? This up move that you see on here, you can see there's a big seller sitting somewhere around over this $1,000 level, right? So every time it goes up, it gets flushed. Goes up, gets flushed. Now this time when it goes up, it has this retest of somewhere around this $1,000 region before it actually makes another move, right? Let's take a look at Netflix. So if you look at Netflix, this $150 price point looks like a region where there is a lot of resistance, right? Every time it tries to go, even try to reach it, it doesn't really go. But once it goes through the 150 region, the price goes through, and then when it comes back to $150 region, right? We talked about this region is a strength of the region of support, and once it comes back again this region, this resistance becomes support, and then you see this up move. Let's look at Facebook. Facebook, you can look at the $145 level is really the region where this region is where there's a lot of resistance, right? Every time it tries to go and doesn't go. Once it breaks through, comes back, it retests the same region again, goes through, comes back and try to retest the same region, goes back, and that's it. Another place of resistance you can see on the chart is this $155 region, right? Every time it tries to break this 155, it goes up, comes back, goes up, comes back, and finally it actually breaks through. Let's look at Tesla. With Tesla stock, you can take a look at this $300 region is a psychological support on here, right? So if you look at it multiple times, it goes through 300, it actually goes back up, try to retest it, goes back up. So that's the thesis of between support, resistance, and how resistance becomes support. Next thing we'll try to look at in terms of reading the price action on any markets, right? A couple of things that I personally look at is, of course, the slope of impulse moves getting flatter. And of course, we look at the candlestick body. So if it becomes smaller during the up move or the down move, then chances are it's kind of don't have that mojo anymore. And of course, the slope of corrective move getting steeper. So the steeper the slope is, the more momentum it has, and the less steeper the stock becomes, it means the lesser mojo it has. And of course, if the candlestick bodies gets larger on a corrective move, then of course things that you have to actually look out for. So let's look at these 4 things, right? In terms of the slope, right? If you look at this slope is pretty steep, so it means there's a lot of buyers sitting over here. Now this, when you come down this, and this slope is again, so there's a lot. Whenever you see a slope like this, you will probably see that, you know what, this is a strong trend over here. So you really want to get involved in these strong trends. And then we talked about candlestick bodies getting smaller on impulse move. So on this impulse move, if you take a look at these candlesticks getting smaller and smaller, right? So chances of this really going is highly unlikely as compared to this one when when it's expanding, when it's advancing, these candles are getting bigger and bigger and bigger, which means there's more conviction with the buyers. In terms of the slope of corrective move and candlestick bodies getting larger, so here is where you look at the distribution phase. So right here, you see the accumulation phase, the advancing phase, then you see another accumulation phase, the advancing phase, and this is a distribution phase. Why is that? Because if you look at the volume down here, you see on the any down move in the market, you see this gigantic volume sticking its neck out over here, right? I mean, these are pretty noticeable distributions going on over here. And then after a good amount of distribution, then you see a decline on here. Let's pull up another chart. So same thing. This is the accumulation phase, this is the advancing phase, and then you see, once you start seeing this big distribution phases around here, then you know that, you know what, there's a chance it might get declined. So that's what it is. Now in terms of memorizing candlesticks, there is no really need to memorize candlesticks. You just have to understand how the candlesticks are being structured. So in terms of looking at the wick, the length of the wick, the size of the body, and the close of the candle. Let me explain. A candlestick body, right? So what this candle means is the price started at this point, it opened at this point, and by the close of the day, it was at right over here. So it means this is a really convincing fact that with the price open and price close, people are desperate to get in the stock, right? That's the reason why it opened at this price, and because of a lot of buyers, it pushed it all the way to up over here. In this one, the stock opened right here, right? And the sellers try to push it all the way down. However, the buyers are gaining control. That's the reason why, if you look at it, the price actually closed higher because there's a more demand for the stock. And when you talk about this candle, the stock opened up over here. The sellers did try to push it down a bit, but then the buyers quickly got into control and they managed to close it at highs. Now these are price indecision, right? So this one, the price opened over here, the sellers tried to push it down, and the buyers came back up and pushed it all the way up, and now the sellers have equal strength to actually close it down up over here, right? So there's a lot of indecision in this one. So this one, if you look at these candles, looking at the open and the close, you cannot really tell whether is the buyers are in control or the sellers are in control. In these ones, it's pretty obvious, right? In these ones, not so much. Now look at the bearish candles. In this bearish candle, the price opened up over here and actually closed down here. That's the reason why your opening price is higher and your closing price is lower. That's why you see a red candle on there, right? So the sellers are in total control. This one, the price opened up over here. The buyers try to push it up, but then the sellers came into control, and that's why they closed down here. And this is the same thing. Now, let's talk a bit about advanced candlestick knowledge, right? We talk about simple candlesticks, but candlesticks don't really, anything in terms of candlesticks, they don't really work in vacuum. It always compared to you have to look at the major trend of the market or major trend of a particular stock and try to see with the combination of other candlesticks, how will the candlesticks actually matter. So let's take a look at it. Pin bar. So pin bar is a bullish pin bar, which is a small bodied candle with a long or lower wick showing rejection of lower prices. So what does it mean? So if you look at this candle structure, right? So this candle, it opened up over here, it closed down here, and then the next day, the price opened over here, they try to do one more push down, right? Oops, sorry over there. So day one is this, price opened up over here, it closed down here. Day two, it opened over here, the sellers try to push it down here. However, what happens? The buyers come in and they actually push it back up and try to close it near the highs, which is a bullish pin bar. And of course, the next day, the buyers have actually shown their full strength. And if you look at it, it actually opens over here and closes over here. And the close is actually higher than the open over here, right? So this is a pretty bullish chart formation. Let's take a look at on the bearish side. Day one, the buyers were in strict control. They bought it over here and they closed the stock over here, which is a lot of pending demand. The next day, buyers came in again. They opened it up over here. They try to push it up over there, but because there's too much sellers over here, right? And then that's why it got pushed down here, and then you get this bearish pin bar. The next day, same thing. the candlestick opened over here, and now it closed down here, which means the sellers are in control. And once again, the sellers, this candlestick, look at this, look at the body of the candlestick, and in terms of where it actually closed, it pretty much nullified all this bullish candle effect. Inside bar is it can be a continuation pattern or a reversal pattern depending on this, where the stock is. So within the inside bar, what it is you get a extremely low volatility. What it really means is this is a big body candle, and then you get this inside bar, so which means that there's a lot of uncertainty in there, and this, if it's an uptrend, then if the price breaks over this inside bar, you want to trade it on the long side. If it's on the downside one, you want to look at this region, and if it breaks below this, you want to trade on the lower side. The rising three method, right? The rising three method can be a bullish one, or if the stock is dropping, then it can be a bearish one. That's something for you to understand. That's why you talk about if the candlesticks are 3 days up or 3 days down, you don't want to go and buy it at the fourth day or sell it the fourth day, right? Because those are really the point where there's, for 3 days the buyers have come to play. I mean, how many buyers can there really be? Can it go in the fourth day? Maybe it could, but chances are it probably will go in the reverse direction. Now take a look at wide range candles, right? Whenever you see a wide range candle, you will see there's actually a strength in that particular direction. So when you see a wide range candle like this, you see there's a strength in that direction. Again, if you see a wide range candles, so whichever direction the wide range candles end at of the day, that's a direction you want to be looking at in terms of trading. This is an example of narrow range candles where after an up move, you see a lot of narrow range candles, and then you see an expansion of the stock. Right. Once again, you see a narrow range region, and then you see an expansion. Now, in terms of price action strategy that really works, a couple of steps, 5 steps to look at. Firstly, you want to mark the area support and resistance, right? If you have a plain chart, take a look at where the support is, where the resistance is. Support, again, is a region where the buyers are willing to buy. Resistance is a region where sellers are willing to sell. So let's take a look at it. Step number 1, we look at this particular chart and try to quickly understand where the support levels are and where the resistance levels are. So once again, support and resistance, the support will turn resistance, resistance will turn support. So let's look at these price points, right? So this is the region of support, right? It goes down, it goes back up, and now it becomes resistance. It was support over here, now it becomes resistance. Once the price breaks through this region again, it was resistance before, but now it has turned support. So it means this is a valid region. If you look at this price point, you look at the stock falling through this point, coming back up, again it becomes a resistance, falls through, comes back up. Now you know this is a resistance point here, and then you see the flush again. Now you want to wait for the directional move, right? So once you identify where your support and resistance are, you want to take a look at, you have to wait for the price to come to these regions for you to take any action. It's not that you're going to go and take any action down here. You have to wait for it to actually come to your region to take action, right? And then you wait for price rejection. In terms of price rejection, we always look at the candles, right? We spoke about the different candlestick patterns. You take a look at where there can be a price support or price rejection. So even though it just came to that region, doesn't mean that we are going to go and initiate a buy or a sell position. We will wait for it to come to the price region, and then we see, is there a price support or is there a price rejection, depending on the candlestick formation, and then we will take a look at taking a position. Now, once you see this, the fact that it has come back to the price rejection region, and we have seen this candlestick pattern, then we want to take a position below that candlestick pattern. We take a stop short entry over here with stop up here, and we see the flush. In terms of where we take a look at the position, so we talked about this is the region we want to look at, and once the price comes in that, it forms this candlestick pattern. We take a short position over here, and then we want to take two regions that you want to take a look at in terms of taking profits is, of course, the swing lows, which is one over here, and then the next one is over here. So those are 5 steps to take a look at in terms of understanding price action strategy that really works. Guys, if you like the video, please like and subscribe. And once again, I want to thank you for your time and good luck.